Namaskar. How did the markets do for the week ending September 9th? And where is the Dow, the oil, the crypto, all the things that we deal with day in and day out headed for this week? To know all about this and more, let us welcome our co-host Sridhar Chityala ji. Sridhar ji, namaskar and welcome to PGurus channel.
Namaskar, good morning to everybody, and looking forward to some interesting data as we wrap up the week and look forward to what is ahead.
Sridharji, with your permission, I'll start the slide presentation going and you can talk to it, sir. Let us start with how the Dow Jones Industrial did. Here we go.
Okay, just to give you first, we are looking at the equity markets across the United States, Europe, and Asia. Dow finished, as you can see, there's a consistent pattern, between 1% to 2% between Dow and NASDAQ. They were up. That cascaded through the other markets, which is the European market and the Asian markets. You generally see a consistent pattern. The United States kicks off and then that gets cascaded into Asia and Europe. So the markets were reacting in a positive territory for only one reason, that there seems to be a predictable pattern of central banks trying to regain control of inflation, and the rate rises following a pattern of 75 basis points. I think we reported through the course of the week most of the central banks rising rates through the last week. So that's what was felt in the equity markets. It's not a sign that the markets are back in the bull territory. It just simply means that there was an aberration and markets took advantage.
And now let's take a look at currencies. The dollar continues to strengthen against most currencies, Sridharji.
The dollar continues to strengthen against the most currencies. The only good news is that the euro just went past $1, just marginally $1, and you saw that even the euro gained against the British pound gained against the euro. So there's again the appreciation of the dollar, the depreciation, but they seem to be hitting those numbers again. In the Asian markets, you saw the yen and the Canadian Rooney, making an impact, and then the Australian dollar was slightly down relative to the US dollar. Again, the rates were rising. So the currency markets are responding between the European market and the US market to the patterns that you are seeing within the interest rate. So this is what we mean by saying right around various markets, which is equities, currencies, bonds, commodities, and energy. We saw a pattern. So in the last, you can see that there is a bond slide, which is the US 10-year, the Bund 10-year, and the Japanese. And the US 10-year bond continues the previous. Yeah, the US 10-year bond is still hovering around the 3.3% or 3.31%. And then the Bund was slightly, if you recall, Bund was about less than 1%. Now it is around 1.7%, 1.691%. And the Japanese 10-year is also inched a little bit, and it is around now 25 basis points. It was almost close to zero. So the bond markets are continuing to discount and pricing the yields based on the rate rise that is expected from the Fed.
And now let's take a look at oil and other energy prices. Sir, last week Brent was 85. Now it's at 92. Can you hear me, sir?
It has, every day since we spoke, it has grown. Yeah, every day it has grown. You can see the last rise was around 3.7%. So there is, again, these markets, these are spot prices. So people are looking at momentary aberrations and whether Iranian oil will come in or will not come in. And so also there is a delta of almost close to $6 between the Brent and the West Texas intermediate crude. So the markets, as you correctly predicted yesterday, last week they were below 85. Now they're back to 92. Just reflecting that there is a sentimental move towards whether there is a fear that further supplies will be cut or further supplies will be disrupted. The gas, natural gas, as usual, because of the specific demand issues, you saw that price go up as well. With regard to, we'll get to crypto in a minute. With regard to the main commodities, the gold has not. I mean, everybody predicted gold to rise, but it has still been operating around the 1700, 1700 to 750, 1750 handle. But the most important thing is that all the three, gold, silver, and copper, all the three are on uptick. Usually, you see when you have uncertainty and volatility in the equity markets as well as in the currency markets, you begin to see some movement, marginal movement in terms of shifting to these alternate assets such as not alternate the commodity assets such as gold, silver, and copper. Copper, there's continued demand in some parts of the markets. Again, it is driven by supply chain issues rather than the price equilibrium. As far as crypto is concerned, it took its hit. It was $3.2 trillion. It's now less than $1 trillion, but still relatively much higher than where it was in 2019. The Bitcoin is hovering around the 21,000. Ethereum is around, I think one has to say Ethereum is one that may move further in terms of the more market opportunity. It is around the 1700. If you go back last year and even in late year before last, we were talking about 40 to 60,000, even 100,000 Bitcoin, and Ethereum was around the 3,500 to 4,000 mark.
Sridharji, for wrap up, I just want you to kind of weigh in. What do you think will cause a turnaround in the fortunes of cryptocurrencies? I've always liked Ethereum because it was a realistic application of the blockchain concept. And you could use the wallet for a variety of applications. We have used it in some of our startups. So I have some experience of this. In terms of value, I see more value in Ethereum than in Bitcoin, because Bitcoin, in my opinion, has run its course because of the fact that it's taking more and more money to mine even a single Bitcoin. So at that some point, cost of mining could exceed the cost that it will fetch in the market. How do you see these cryptocurrencies in the next few months, sir?
I think your observations around Ethereum is quite spot on. Ethereum is an ecosystem, not just purely beyond a store of value. So there is a much positive upside, and there's work going on around the Ethereum blockchain, as you correctly alluded to. So which would have implications in terms of as a digital token. As far as the Bitcoin is concerned, remember that close to 60%, 55 to 6, over 50%. I don't know whether it's about 55, 56% of the overall cryptocurrency is concentrated in Bitcoin. So if there is a navigation, you see that there is a navigation in that, basically because it can be used as an alternate asset for certain types of transactions that still is happening. That is the reason why it is there. This is not, as we mentioned time and time again, this is not something that is going to be used as a retail store of exchange, but more around the broad specific category of assets and large value transactions. So summary is that the much will depend on what happens to the equity markets and interest rates. It is only an alternate asset. Remember, we mentioned to you that somewhere between, on the lower scale, between 2.5 to 3% of a holding will be in crypto, and on the higher scale, it will be on 5%. And you can see the volatility and price hikes when it reaches that 5%. But around the 3%, it will still maintain the same similar value. So I think that's my observations on the crypto. I just want to make two observations as we kind of try to wrap up. One is this week, the week ahead, two important data points. One is the inflation number, which is the CPI, not the core inflation. If people don't understand the difference, consumer price index includes a basket of assets where you have seen price movement that includes food and oil, whereas the core inflation excludes the aberrations, excludes completely the volatility in the oil and the food markets. So CPI is a much more predictable number. It is expected that the August numbers will be less than July numbers. Whether that will tilt Fed's thinking, I don't believe so. Markets have already priced in 75 basis points. The other one is the unemployment. Let us see what the unemployment numbers say. So these are two headline data points as we step into next week.
Thank you very much, Sridharji, and that was a wonderful look at the markets and your predictions for the next week. We've been very, very clear in our predictions, and we've been more or less spot on. And I think our viewers appreciate that. We have been welcomed with open arms. So we would like to continue doing this thing, viewers. However, we need your support in two ways. One, refer this program to all your friends and family. Second, do put in comments, because that's how we understand which is of more interest to you, and we'll try to cover that in more detail. There's a lot of information out there. We want to be sure that in the time that you all have, we give you the best possible news content. Thank you very much, Sridharji. Have a great weekend and namaskar.
Namaskar. Thank you so much. Have a wonderful weekend.